Hello and welcome to Second Wave Investment Strategy Series, Episode 2. Well, in my last episode, I told you about two stocks where you can invest in during this second wave of coronavirus, which is deadlier and is spreading like wildfire. Okay, so today I'll talk about two more stocks where you can invest in money, which can be good options to invest in during these dire situations. As we all see, we are all watching news. The situation is getting bad with more than 3.4 lakh cases coming in a day. So that's a dire situation. So we have to be careful when we invest our money in stocks. What is important is that you should pick up well-known stocks. This is not the time to invest money in unknown companies or lesser-known companies. You can invest in companies which are well known and which have been around for some time. Mid-cap stocks are also a good option. I'll do a series on that also. Okay, so majorly I'm dealing with well-known stocks in these episodes. Okay, so today I'll talk about stocks which are health related. Now, health is in focus. So today I'll talk about stocks which are health related, which contribute to health infrastructure and which can gain a lot during this pandemic. Of course, no one wants the pandemic to get worse, but these stocks are likely to gain because of the health crisis. Okay, so these are well-known companies. The first company is Dr. Lal PathLabs. We all know about this company. It's a diagnostic company and a healthcare brand where we are all kind of getting tests done for us and our families. So if we look at the stock, we know that the stock has done well. There's one more thing that I would want to say. There's a little change in strategy. Like I generally like to invest in or suggest that everyone should invest in a stock for at least 3 years. Okay. But because of the changing situation, what we'll do is that we'll look at stocks where we can put in money for 1 year and then we'll relook that portfolio. So I've kind of changed my strategy looking at the situation. Okay, so because not less than 1 year, because we don't want to pay capital gains tax. Of course, the stocks which I'm telling you, you can definitely put money in them for more than 1 year. Okay, they are good stocks. So I'll just get rolling. So Dr. Lal PathLabs is the name of my first suggestion today. It closed on 2,883 on Friday. This video I'm making on Saturday, which is 24th April. Okay, so this closed on 2,883 rupees, and we all know it's a international provider of diagnostic and healthcare related tests company based in Delhi. The company was founded in 1949. The stock has seen good growth in last 5 years. It started its journey from 985 rupees in April 2016, and of course now it is more than 2,883 rupees. The PE ratio of the company is 99.12. Dividend yield is 0.42. 52-week high is 3,399. 52-week low is 1,472 rupees. So 1 year back it stood around 1,496 rupees, and so it has kind of doubled in 1 year. So the market capitalization of the company is 24,443 crore rupees, and ROE is 22.2%. The face value of the stock is 10 rupees. 3-year chart, well, 3 years back it was around 847 rupees, and of course this is just grown because of the pandemic, and it's a health related stock. Okay, the company is debt free. Company has been maintaining a healthy dividend payout of 30.45%. Okay, so that's good pro. If we compare with its peers, except for Apollo Hospital, it has done well. Okay, it's a quarter profit thing. It's around 74.68%. Company has done well. Operating profit, it stood at around 64 crore rupees in March 2018, and now it's 139 crore rupees by December 2020. Okay. Net profit has also grown from 40 crore in 2018 to 94 crore in December 2020. And the profit net profit has also gone up from 171 crore rupees in 2018 to 241 crore rupees by the time the company has filed its documents. ROCE, which is return on capital employment, well, that has also grown. Okay, it's currently at 32.08%. Okay, if we compare with its peers, then well, only Metropolis Healthcare is ahead. Otherwise, it's on number 2. So ROC is also good. Okay, the company's liabilities, well, they have also grown. When the company grows, the liabilities also grow because the company tries to spread its wings. So in that, the liability grows. But the company is in profit. Okay. So total assets of the company have grown from 916 crore rupees in 2018 to 1,517 crores by September 2020. Okay. Cash flow has also grown. Okay, if we compare its ROCE from March 2018 to March 2020, it was around 37%, okay, in March 2018. But by March 2020, it's like 32%. Of course, the pandemic was, holding everything. But still, the company is doing well. Promoters have 55.23% of their share. FIIs have 26% of their investment. Okay, so the company is doing well. The company is likely to do well. And you can definitely look at the stock if you haven't. Okay. Next stock is Thyrocare. Okay. And Thyrocare Technologies is again a diagnostics company. And Thyrocare stock was trading at around 1,018 rupees on 23rd April. Okay. And its headquarters is in Navi Mumbai, established in 1996. 52-week high was 1,212 rupees. 52-week low was 482. So that's a huge gap. PE is of 72.78. Dividend yield is of 1.23%. So this company also pays dividend. Okay, if we look at its 1-year trajectory, well, it has also jumped from 526 in April 2020 to 1,118 rupees. If we look at its 5 years trajectory, then also it has grown from 603 rupees in 2016 May to 1,018 rupees. Okay, if you look at the 3-year thing, say July, it was around 2018. July 2018, it was around 574 rupees. So again, even in that 3-year parameter, it has jumped. ROC is around 35.3%. Okay, and return on equity is around 22.3%, which is good. Almost debt free. Company has been maintaining a healthy dividend payout of 70.49%. Okay. Cons is that the stock is trading at around 12.77 times its book value. Okay. Compared to its peers, well, Thyrocare PE is one of the lowest. Okay, so around 73.24%. And others like Apollo Hospital, Dr. Lal Path, Max Healthcare, Fortis, Metropolis, they are all higher than this. But this company has been just growing, and also it is likely to do well. Most of the experts are advising this stock currently. Also, I would like to add is that this investment strategy is different from my earlier strategies. This is for 1 year. Okay. So in this year, because the tests are more and we all need more tests done and repeatedly in a year. So this is why I'm betting on this stock. The operating profit has grown from 37 crore rupees in March 2018 to 50 crore rupees by December 2020. Growing. The growth is not dramatic, but it is growing. Okay. Operating profit is also growing. Okay, if you look at the liabilities, its liabilities have grown because of course, the company is expanding. So 479 crore rupees in 2018 March to 524 rupees, 524 crore rupees by September 2020. So if you look at it, if the profit is not growing drastically, even the liabilities are not growing drastically. Okay, ROCE ratio, if you look at it, in March 2018, 33% was the ROCE. Okay, 33%. And by March 2020, it is around 35%. So this company is steadily growing. The promoters hold by March 2021 around 66.14% of the stocks of the company. IIFL have around 20% of share in the company. So if you look at this company, this is also doing well. This is not growing as fast as Dr. Lal Path Labs. So experts are also backing this stock. So this is a wrap on this episode because again the video became long. I'll be coming up with more health stocks and of course other stocks in my third episode. Do watch out for my first episode. I'll put a link with the video and of course the other episodes. Do share, subscribe, like my videos, and of course leave a comment below if you want me to talk about some particular stocks. It's been a while that I've been spoken about some particular stocks. So this is Anupam Sharma signing off. See you in my next video. Bye-bye.